Okay, good afternoon, traders, and welcome to the Bookmap Academy session here. We're going to go through live coaching and mentoring for the various traders. And let me make sure it's working over here on the various traders. Yeah, okay, on YouTube. Okay, we're good to go. All right, so we have some housekeeping stuff to go through, and then we'll get right into the coaching. The goal here, is to introduce you. If you're new to this Bookmap Academy, we're offering this program here through Bookmap and through our Discord channel that you can get feedback on your content, on your journaling of your trading. This is a really nice community and a great way to improve your trading. And I don't know anyone else that's doing this kind of program. So it's definitely a benefit here. You can sign up if you go to the website here, bookmap.com, click on the More button here and go to under Community, go to Bookmap Academy. You can read through it here, and there's a process you go through in the steps, and you can get Bookmap for free if you make it to one of the levels in here. So we have quite a few guys using Bookmap for free. Because they've earned it through their journaling. All right, so risk disclosure: all Bookmap limited materials, information, and presentations are for educational purposes only and should not be considered specific investment advice nor recommendations. Risk disclosure: trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Another thing, for those of you in the Academy, you are already paired up. We have your email, we have your license key, and we also have your Discord name. It's necessary through the Academy because we communicate through the Discord, but you have to sign up and fill out the form on the website. So if you don't have that, then you won't be able to, if you don't have your Discord and email paired, you will not be able to get access to a lot of the freebies and beta programs that we have. And I have some really interesting things to show you here. So sign up, take your phone out, take a screenshot of this in the QR code, and then you can sign up immediately on your phone. So let's jump in here, and I want to show you a few different things in Bookmap. You can get access to, well, I have it here on NVIDIA, a footprint chart. Okay, so this is a new add-on that we've added here, and there's all sorts of different configurations. I went over it briefly last time, but I have it in a profile form here. But there's all sorts of different ways of looking at the data here. So great new charting system here, or add-on. We have another one. We have the anchored VWAP that actually I showed last time as well. We won't go over it this time. And we also have Market Pulse, as a lot of you guys are aware of. We had that for a while. So these are all free and open right now for you. You'll just need to sign up for them. And of course, you will need to have Bookmap for that. All right, so great stuff there. All right, let's jump into the coaching. And we have a new coach. We have David. And we're going to go over a few of the images from David here. Just a minute. Okay. Oh, I'm sorry. Or Jack, did you want to go first?
It's up to you. We can do it your way since you got yours loaded up right now.
Okay. All right. So we got 3 different trades here from Dune Runner. And David, why don't you jump in, and we'll start with the ES trade here, or you can start with I have the gold and the YM one as well. Up to you.
Yeah, well, perhaps we can jump onto the gold. Sorry to jump around there, Bruce.
No problem.
Good afternoon and good evening. I say good evening because I'm in the UK, as some of you know. So really nice to see a gold trade. And I trade a little bit of gold myself, and I was saying to Bruce just a bit earlier on, this is very much a big boy's future, because as most of us will know, you get on the wrong side of this and it really starts to rip your face off. in terms of posting, what I find useful, and I used to do it, is in terms of, I assume this is Eastern time, but there are many of us traders like me that aren't in the US. So my charts are on UK time, they might be on European time. So it can be, if you're not in the US, but also if you are in the US, to state that sort of early doors of what it's about. I think another good useful thing to talk about on any of the posts is to, if you can, to set some context. Now I'm contradicting myself here. Anyone who sees my post in Spot Gamma, I don't often put a lot of context, but that's because I'm trying to post sort of near real time. I'm trying to let traders in the room know I've got into position, I'm getting out of position, what's going on, to help them with what they're trying to do, and that can be good or bad. So if you are posting at the end of the day, or you're posting to cover the previous day, maybe put out a little bit of context. This was last Friday, I think, the gold post. So if there's any particular news going on or something, sort of put that in at the very start of what you're talking about, so it tells you. I've also liked on some of the posts that James has been doing is using other systems. I think we all do. We all use systems, except maybe Bruce. We all do use different systems. You know, if you those that look at Tom B, a good friend of mine. Yes, he's an absolute expert on Bookmap, but he's got IRT running. So don't mind bringing those other posts into, particularly where we're using them for longer time frames, or as I often talk about more the voodoo. You might be like, for me on Ninja, I've got loads of EMAs running, different types of VWAPs, market profile, a whole raft across different charts that help me use the sort of more microscope of Bookmap to get into there. Another thing about gold, which is worth noting about, and I talked about this last week, generally, is time of day. For those that don't know, and I'm sure that James does, is that gold is fixed twice a day. It's fixed in the UK at UK 10:30 time, so that's the middle of the night for most people in America. But there's a 3 p.m. fix, that's 10 a.m. New York time, and then you get a blend when sterling gets fixed about an hour later. So you can get these little quirks in gold, as I won't say as we're seeing on this chart, but you'll often get reversals. So when I'm trading those assets, I'm thinking about that sort of time of day. Great pattern here. So well flagged out there, James, where it's the price is dipping down. We've got plenty of greenery coming in on the bid. And I'm going to say it's a crude sort of building of higher lows off the pink area you've highlighted and so forth. Be interested to know, and I know this is old school, of what other correlations you're thinking of. You know, if you went back many years, you could be looking at the dollar, you could be looking at bonds. Again, when I'm trading these assets, as Jack was just talking about now on oil, is just trying to sort of see what else is going on in the market, just to sort of lower the risk on the overall trade. But a great chart and a great bold trade. As I say, this is a big boys trade. You did very well there to take it up on gold. So fantastic. Although I think that's good. Is James with us, Bruce? Do you know, please?
I don't know. It's Dune Runner.
Yeah,
Is the
my
name. But I don't know if Dan, you see him in here?
I don't see him in the channel.
Okay. So I did have actually a comment in here on this one, which is great. This is a new tool actually we developed for Scott Pulcini. It's called Scott's Zones. So it draws his zones in automatically based on stops and icebergs. So this was a stop event. It drew it automatically. And this was a nice thing to lean on. You've got high liquidity, like you mentioned, David. You got this bounce here. It's in a zone, and then you're looking to take it back up an ATR, back up into exit up into this high liquidity up here. So beauty, real nice.
My back trade. It's a fantastic trade to take, and say a bold trade as well. So very good, very well played. Any other comments from my fellow colleagues at all, please?
No, we talked about it, and I agree with you wholeheartedly. I love the trade in general. It's great. Gold is
Right,
just not an easy product to trade.
it's not.
it's a big product.
It
So I wish
is
he was
not.
here. See how
Yeah,
often he trades it. So
yeah. What's the next one then, Bruce? Please, you want to zoom in on?
Oh, sorry. The ES or YM. Here's the YM.
Yeah. No. YM. Okay. So this is with James, who's hopefully with us, and I can see, as you mentioned already, Bruce, you've got Scott's zones in there. The interesting trade on this one again. So I would repeat all the things that I was saying about Robert in terms of setting that context when you're posting. Any correlations, any news coming out, particularly on the indices. So, what was happening on that particular day? Was there something coming out? Now, this trade here, Bruce, I think it's Eastern time. This is, again, back to the old days, you and I talking. This trade is coming into the London close. And you can see that today on the indices. Pretty much on the dime, when London closed, the market really picked up. Now, this market's picking up here. We can see a little bit before London closed. That's 11:30 here. There wasn't any news on the day when I look back on the calendar, but you can see at 11:30 where the volume's picking up. London's closing. That can be a whole raft of reasons. It can be institutions, day traders, bagging up, opening positions. It doesn't really matter. At the end of the day, you can see volume is picking up when Europe and London is closing and the market scoots away. So that's a good trade that you've taken there for sure. Another thing that people, if you see me in Spot Gamma, I'm always saying BTD, buy the dip, because this market is just, as you've seen today, it doesn't matter what numbers CPI were yesterday or anything to do with sales, whatever, the market is just relentlessly bid. If it pulls back, it's just a pullback and a fade before it rallies. So that sort of context as well within your narrative of what perhaps you're expecting today. I'm expecting the market to go up. I'm expecting Nvidia to go to the moon, and I'm going to trade accordingly without being too sort of blinkered on it. Thoughts, Bruce, please, and see if James is with us, maybe.
I don't have any thoughts here. It got stopped out here to the tick.
that's
But
a tough stop.
it's a tough one. Yeah. I mean, you got 1, 2, 3. One of the things that might help on that is to identify. We covered this all the time. Looking at these areas like where it really picked up. It's actually right around here.
London close, yeah.
And you can see, where it really picked up, right?
Yeah.
Well, a lot of times that's exactly where you'll get your pullback. Sometimes you get it down to this area here. So I mean, a stop, maybe it's a lot more risk, of course, but like down in this area here might be better.
Yeah. Also, it might have changed. I would change my positioning a lot if I had a two-part position. If I had runners and that was a runner that got stopped out, that would be a different setting. I would probably pull my runner way lower down at that bottom yellow line you have there. Because the way price interacted at that structure, there's some trading there to some degree.
Yeah.
Once it ripped up, you have no market structure from the close, from the London close, and that's just a pullback, basically from that imbalance of that hard rip up. So you don't really have any of that market structure there. So it makes it really difficult to kind of place a stop. But if you took that initial move and you took profit off the table and you've locked in something there, at that point you can be a little bit more aggressive and have your runner at more of a neutral standing, and then just kind of let things go.
Yeah, very true.
Yeah.
Very true. And if I add in how often you'll see me trade those runners, that just politely pick some numbers. So on that break from the London close, I might have scaled in pretty quickly when I'm seeing that go near vertical. I'm looking at time and sales. I might go 2, 3, 4 contracts. When I started to see it pull back, I'll just leave one on, as you're all talking about. And then if it has picked up, as we can see there at sort of 12:45, as it's picking up into New York lunch, I then wait till I've got a fair bit of market money on that one contract, and I'll scale in again, just using the market money. So it's a free trade. It's become a free trade, and the only risk I took on the trade was back on the London close.
Yeah, quick comment on that, David. I've always liked the way that you manage your trades like that. You go in heavy,
Yep.
you take some off.
Yep.
You're playing with the house's money at that point, and you know you're free and kind of liberal to like do whatever you want with it at that point. You know, you can kind of be a little more kind of loose with it. Put it that way. And then you can also add more in if you
Yeah,
like.
you can, and you are rolling the dice. You're more gambling than trading. I'll put my hands up if the camera's on to that, Bruce. But yeah, I've got nothing to lose, so to speak. It's it's ill-gotten gains that I'm just throwing away. But of course, I'm doing that in an educated, systematic way.
It's kind of similar to a setup I showed earlier today in the academy.
Yeah.
I look to fade a level, and we just heard David talk about buy the dip, buy the dip, buy the dip.
Hmm.
I was already long. So what I look to do is I look to fade that level for a set profit target. And essentially
Nice.
what I do at that point with an option position in a long future is I'm locking the P&L at that point, right? So if I'm already long the market, I can use other instruments, whether it's a micro instrument or a correlated instrument, which is something you'll see David and I talk about a lot in general. I
Yeah.
can short that instrument, and the correlation will still keep me relatively equal. Take that short term trade off for whatever profit I'm able to take, and then let the existing runner continue to materialize the way it was going, as opposed to entering and exiting a trade every time. You might already have the direction right. So just stay in the trade and let it run for a little longer, as long as you can reduce your risk somehow. So
Definitely.
there's lots
Definitely.
of different
Wise
ways to
words.
look
Yeah.
at it. These are just a couple of them. But again, though, notate those things. I put it in my journal entry. I'm already long the market, so shorting right here doesn't hurt me. I'm just trying to gain a little bit more out of it.
That's it. Yeah.
Whereas sometimes we don't see some of these things. We don't see any of the notes there. They're not in the posts or anything else. So make sure you guys are putting those there. David mentioned that as well. That's all I had for
Definitely.
these two. These are great overall.
They
It's
are.
it's
They
a
are.
really tough trade right there on that pullback.
Yeah.
All right, let's move on, guys, to let's see, it's ME, or I'm sorry, who is it here? Uh, Hold on. All right. Yeah, let's go on to I don't know the screen name. Who this
That's
is?
still
Invisible
Robert, the
Intuition.
MES.
Robert. Oh,
I
okay,
think.
okay.
Yeah. Yeah.
Yeah, and I don't know, Robert, if you're in here, we can turn on the mic for you. And Stan, I invited you to speak, so you are able to join the stage, speak. All right, so why don't you continue on, David? What did you want to comment on here?
Yeah, sure. Nice post, great post. If I sort of reiterate the points that we've been talking about, setting some context, etc., whether there's any news, I know we're sort of labouring and hitting in that point. Nice to see an MES post. Now, those that have watched and followed Moby, he highlighted this, politely said, a good few years ago, that you can often get better structure on the micros. And I'll rudely say, I don't think Moby actually discovered that himself. He probably picked it up from somewhere. But you can get better structure on Bookmap on the micros to lead you to trade. Now, whether you want to trade the micros or trade the minis, up to you. And I do run micro charts on mine, but I rarely post them. The candle chart, this is back to what I touched on at the start, using different systems to give you a different lens. Trading for me, I've used analogy before. If I use the Super Bowl from Sunday, it's a game. It's a football game. We just sit in different parts of the stadium, and we have a different view of how well things are going or not going. And I use those different systems. And like here, it's a 2-minute time chart. Fantastic. At the moment, my favorite time chart is 30 seconds, but I often play around with that, as well as tick charts, and obviously as well as Bookmap. This chart here, the one on the left, is fantastic in terms of Steve Nissen. Those that know Steve Nissen, he was sort of, if I say, more of the godfather in terms of candle patterns out of Japan. You can see the level marked of 5,042. The price is coming down. We've got they're called pseudo hammer candles. They're highlighting some exhaustion with a thin wick. The price has dipped below that level, but it quickly comes back up. So you've got trapped sellers and buyers are coming in. A key candle there is the red candle on that line, which I say it's a broad hammer candle. You can see the volume below is in red, so it's the red bar above 714. So there's selling going on there, but the price really isn't going down. It's a clue. It's not a trigger, but it's a clue back to using that sort of phrase of exhaustion. Now, other things, I don't have my own charts for this particular moment in time, but again, back to looking at those, I mainly trade reversals. So I am interested, as I call it, voodoo in terms of the VWAPs, EMAs or EMAs, market profile, high of the day, high of yesterday, or all those different things that you will get. And as Jack was just talking about on the previous charts, where you've got that structure and the market can react to it. And then you're looking for that. And you can see that then on the bookmap chart, you've got that lovely V, you've got the red coming down, and then very quickly you've got some green bubbles coming in. It's below the point of control, the volume point of control, the yellow line, and off it scoots. Now I'm assuming the time here, Bruce, is it's Eastern time, and I'm presuming this is, it's extended trading hours or electronic trading hours, whatever you want to call it, because it's pre-bell and so forth. So a little bit more context would be nice for me. But yeah, good posting, and can't stress enough, good seeing that confluence of candle charts with Bookmap. Thoughts, Bruce, please.
I really like, we've talked about this actually last week, and then Rob, I'll go over your charts in a bit here, but I like seeing the setup, the flag pattern. What are you looking for? You know what you're looking for. Does it match? And go through your checklist, this will help you identify good trades and keep you out of bad ones.
Definitely. Wise words.
The up on the top right bookmap image, I really liked that you get that the CVDV, so you know volume is really shifting that location, but you really get that pullback to VPOC with that flag pattern. And I really think that highlighting that in your journal entries for longevity is incredibly important. You do a great job here putting it there. Just put it on the chart too. So that way, when you go to look at this chart in 6 months, you're seeing that breakout above, the change in the structure, the pullback to VPOC, and you've got a good potential entry there. There's two consistent entries. You can take the breakdown or the breakout in this case, or you could take that pullback off of it. Highlighting some of that stuff is kind of important. So make sure you put that on the chart as well.
Definitely,
not just in the microstructure, but get it on the big one too, so you can see it. Really great keeping it in Notion. I think that's going to be great for you using multi-charts. If you do use multi-charts, I do recommend something like that. For me, I just end up with more images, and they're just like part 1, part 2, part 3, part 4.
Yeah.
This is a superior method, so good on you for finding something for efficiency.
I think that you'll all know you can turn candles on, Bruce, can't you, on Bookmap? I do see some people do that.
We've gone over it a few times. Some people ask about it because they don't necessarily know, but it's pretty well known. Yeah, I believe now.
Okay, let's go through the next one and then open the mic for Rob. Is it that's who this is? Yeah. Okay. So David, any comments on this one here?
We've got, let's have a little look. So again, it was back to the time, not quite sure what time zone we're on. We've got VWAP, which is a nice kiss and roll. Have I got the right chart there, Bruce? Yes, we do at the top. Yeah, the purple one. So that's a great, I think it's a pre-market trade. The price has blipped up. You've got the red coming in on the sell. it's on that VWAP line, and then it pulls back, which is good. It's a great bit of price action for sharp scalping and two-way trading. The thing I was going to add in here, would be interested to know, is how you are entering. And you mentioned this last week, Bruce, about trades. How you were trading them. One of the things I've been posting quite a bit recently in Spot Gamma is using stop entries, showing people how you use stop entries to get into that. So take this example where the price is coming up to that VWAP. If I am anticipating that this is gonna scoot back, then I can be placing a stop entry, whether that's at 4978.50 or something. So if I'm right, I'm in quickly. The stops have been managed by the system, and off I go. So it'd be nice to know from you, Robert, what you are thinking of doing for trade management within that, and all the other things we sort of said. But you've got looking down, you've got the lower liquidity levels, as I call them, bloods, 67, 66, 65, and 64, which is, Bruce, you might say that's algo driven or something. It's quite formulaic with the blood, and you can see how it's come in as you've got at number one. Price scoots up, new blood comes in, and the blood is not chasing, it's not bullying the price up, which indicated, I know it's hindsight, but it's indicating the price was always going to come back down. It's when those levels start to chase the price up that they're bullying it upwards. Here, it's like, no, this is a VWAP, up it goes, and back it comes down, system driven. Thoughts, Bruce, please.
I'd like to hear from Rob. I mean, there's one thing that's really nice on here. I mean, first off, your VPOC has shifted. You've got your VWAP here, and then also look at your cumulative volume delta. Now, this is, I think you're on West Coast time. This is 6:30 a.m. So this is the cash open. But look at this thing just dropping like a rock. This is a beauty.
Yes, it is.
One of the things that stood out to me is the size of the volume dots is pretty small on the pullbacks comparatively to the size of the volume on the pushes down. So you can tell that volume is entering on that more impulse, and everything else is kind of a reaction to that volume or that imbalance to a degree on those pullbacks, and then it's just more effort pushing down.
Yeah, Phil. Nice, very nice.
Rob,
Yes.
you have the floor.
Thank you.
Welcome.
Thank you.
Welcome.
Thank you.
Yeah.
Thanks for having me. I mean, it's an honor being on here. So thank you so much.
Oh, sure. Well, any comments? Anything you wanted to walk us through on these two images?
Yeah. So the image you were looking right there was the reversal that I was actually trying. It came down into number one. You got the initiated buying, and then when it came down to 0.3, that's where I got in long, trying to get up, trying to get a move, reversal up to, I think I saw some liquidity. If there's a number 7 at the top right, so I was aiming up there. But slowdown actually came in afterwards and gave me some feedback. I really missed the volume on this trade. I really misread that. The selling volume was so much greater, and the reversal actually came down lower. And as you pointed out, that stair-stepping liquidity, just if I remember this trade correctly or this day correctly, came all the way down.
Every single one of them, didn't it?
Yeah, it did.
You mean
And so
in this area here, or where? Where's
lower
465.
50, 64 down there. all that stair-stepping liquidity.
this area. Okay.
Yeah, it eventually, if I remember the date correctly, came down, took out all that liquidity, and then reversed, and actually even went up to my original target of number 7. So it was definitely just excellent mentoring by Slowdown in that sense that I since upgraded that setup, the reversal setups, to take more account volume.
So one of the things you're missing on it from what your setup is to the execution, you look to get in at 3. But if you look just left of 3 and between 2 and 3, you do have that other swing low down there. And
Right.
it does form that lower high. So that tells you that you do still have quite a bit of that potential selling pressure. And with the volume kind of being very light to the positive side, to the buying side, that kind of gives you some indication that this could be a painful trade.
Yeah. Yeah, unfortunately, I missed all that, but definitely a lesson learned. And
You're not the first person to miss it.
Yeah, thank you, thank you. Probably it won't be the last time I do
Nope.
that, but
Not
definitely
even
something we
not
want.
even in this room. We're all gonna miss it at times.
Yeah. And then, anything else, or would you like me to go over the previous trade?
Yeah, maybe you want to go over this one.
Yeah, let me take a look. I think I got some notes underneath all that, if that's my Notion doc,
Yeah.
underneath those images.
Oh,
Um,
underneath it here. Ah, right. Yeah.
yeah, so I saw that, I was watching this and saw that ES was locked in this range. You had like that liquidity up to the top and bottom. And so I was kind of interested in taking a setup there, but I don't really have one. So I decided to just kind of wait it out and see if either side got taken out. And when it came down to that very bottom, I can't really see what number that is. Let me look, let me bring that up for myself. Um,
Here,
it won't-
42.
yeah, 50, 42. I was tempted to maybe go short when it went through, came down, but then I looked at the NQ and saw that that was holding up the VWAP pretty steadily. And then, at least on what I have is a watch list that I have all the sectors of the ES kind of mapped out, and I saw that the risk sectors were holding up pretty well, and the risk off sectors were kind of pulling back. And so I thought, man, I don't think this is a short. So I waited, and eventually it went up and took out the top of that range. And that's where I decided to get in that continuation setup.
Nice.
So the next setup was it goes up, hits 50.46, pulls down, got some liquidity. The order book looked pretty good, and that's why I took a long and took it
Nice.
up to the liquidity up to the
Nice,
top
yeah.
side. So yeah, I try to kind of pay attention to the context of the market
Right.
before really looking at a setup. So kind of looking at
Correlations.
what all the big names, the big weighted stocks of the ES doing, like what's
Okay.
Apple, Tesla, Google, what are all these stocks doing? What's the NQ doing?
Yeah.
And taking a setup
It's-
based off of that.
Even if you don't use EMAs or different kind of trading styles, you can still get a trend direction so that at a glance you can see what things are doing very clearly.
Mm.
Not necessarily great for entries and stuff on those particular things, but with that confluence for the correlation, and then you're looking at bookmap for ES and NQ, it gives you a lot of good correlation. So it's very good to have those kinds of assets available.
Yeah, definitely. I am trying to be a little bit more minimal because when I first started trading, I went nuts with the EMAs and moving averages and pivot levels and all that. So I'm really
Ribbons everywhere.
yeah, so I'm trying to like kind of scale that back, but you got a good point. It would be nice to have that on then, just get a little bit more context.
For one of the things I use, I just have TradingView. It's just I think it's like a 12 panel setup, and it's just one of the tabs, and I just pull it up when I want to see stuff, and then hide it back when I don't. And then the things that I'm looking at active in the day are a different tab altogether. But it might be overlapping. Just depends on the day. But
Yeah,
it's good to have
gotcha.
available randomly. You can do the similar thing with TOS as well. And another thing I've done is I've taken Bookmap, and I don't necessarily recommend this unless you have a decent PC, and I've grid laid out on a 4K resolution the different assets. So they're all in like a 4x4 grid or something, or a 2x4 grid, and you can see the liquidity really well there too. As doing it
Oh,
that
yeah.
way. So, but you are going to really work your GPU and processor if you do it that way.
Yeah, yeah. I do have that grid on Thinkorswim. I had just the candlesticks, but I don't
Yeah,
have
that works just as well for the most part, as long as you
Yeah.
see a trend, an idea, right?
Yeah, gotcha.
It's
Thanks for
getting a
taking-
glance, as you say. It's getting a glance of what's happening on the fangs or something, and I do that. I also do that with spot gamma. What's happening in the options? Just see I'm on the phrase after use. I'm on the right side. I'm not picking a fight with the gorilla. So if I'm going long, I'm not suddenly Nvidia's
You're not running
tanking.
into a steamroller.
That's a bad trade, David. Don't do it. Yeah.
Yeah.
Something I'm experimenting with that I haven't done too much with is the advanced decline issues.
Advancing and declining.
Yeah, yeah, I do have that kind of set up on Thinkorswim, and I'm watching that to see what the broad market is doing.
Yeah.
Haven't really figured that out yet, but I have it up and I'm
So
watching it.
it's a great tool in general.
Guys, we gotta move on.
Oh,
But
oh,
if you want to wrap up on advancers, decliners, I mean, like we're here more for the order flow, but and bookmap. But
good point.
yeah, I'd like to get the kind of weave the discussion back that way.
Yeah, yeah. Sorry about that.
No, no problem, no problem. Um, anyway, I'm sorry, Jack. If you want to finish up your point there.
No, if you're going to use the advancing and declining, you need to keep track of breadth, and that's going to be you need to keep track of the indices themselves. You'll notice in my bookmap, if you look at any of my images, I have the correlation tracker for NQ available, and then on my NQ chart, I have the correlation tracker for ES and Russell, and that gives me that breadth to know, okay, if Russell's incredibly weak, using order flow and looking at the order flow, but NQ's kind of rallying, I know that it's more of a risk on type of situation and breadth is declining in the
Mm,
markets. And you can see that with the order flow directly. And then if you see something where the correlation gets kind of really out of sorts in that correlation tracker, you can pop over to that chart and see maybe there was, a large sweep. Maybe there's going to be an imbalance there. Maybe there's an order flow set up there, or just a massive block of liquidity that you didn't see ahead of time. So, and that's why in my charts you'll often see that I have that correlation for that reason, because it gives you that breadth while you're still looking at ES or NQ for that depth, and it kind of keeps you a little bit balanced between what the market's doing order flow wise.
gotcha, gotcha. Thank you, thank you.
All right. Well, thanks, Rob. And let's move on. Jack, you're
Thank
next.
you.
Yeah,
And I don't know if you want to. Why don't you share your screen? And
yeah, I can
then
do that.
okay, I'll stop. Hold on.
Pulling it up here. Hold on. There we go. All right.
Okay, let me pop it out here. Okay, so guys on YouTube can see it. Okay.
So the two traders I've got today are Donkey and Caesar. We're going to cover Donkey's in the meeting here, and then I've left notes for Caesar, and I've reached out to him as well, so he knows what's going on there. But we'll be really quick here. The reason I wanted to highlight this is because it takes part of something that we forget a lot in our day when you're doing this day in and day out for years, like some of us have been. The monotony of the day can get distracting. You might start reviewing a web page or something else, and you've got to find a way to keep yourself interested as every day progresses. And one of the ways that I found that Donkey did that on this particular day is he changed some of the colors that he was using. He's looking at different colors in his chart today. He's just keeping things fresh. And to me, that is huge overall to be able to do. Now, aside from that, we actually see some really great content here. And what we see is we see a rotation of volume. Let me kind of highlight what we're going here. So he's got his overall his date right here at the top, which is what we want to see. We want to see, what day is this if you don't have it tracked in the file name or whatever. And then we see exactly what he's looking for here. Again, this is kind of a setup. So when he comes back to it from his journaling perspective, he's able to look at this. And then he also takes this and he's showing what he's looking at in the chart. We can see that he's looking for volume to decrease. And then once this volume kind of fizzles out, he's looking to take a reversion back long. This is a great concept if you're going to look at reversion, looking at the order flow and the way volume is being treated, especially with tools like Market Pulse, where you're going to be able to use not just the price change indications, but the volume pressure imbalances. So you can see down at 2, he's got that strong selling pressure coming in the market, and then he's got the response in the price. So he knows this is real selling. So he's watching his CVD, and you can see it starts to flatten out once the market flattens out here. And once that volume leaves from this large sell action, that now has a imbalance. Essentially, there's no more of that large selling, whereas there are more buyers that have accumulated to this point, and he's looking for that potential long, and he's looking for an entry here off of a break and a pullback that stays out of his channel area, which is a great opportunity. And that's similar to one of the previous trades that we saw, where you could take the breakout if you want. You might be in a small drawdown, but if you wait for that retest and you get that continuation you want, you could get that long opportunity. And where does he look? He's looking for that passive liquidity, which he has been tracking, and he noticed it even moved lower. This overall is a great setup. So I want to open it up to Donkey. Donkey, do you have anything you want to add to this? Because I really like this from that perspective, buddy.
Well, I appreciate everything you said there. You covered most of it. The changing the colors and playing around with all that kind of stuff is a healthy distraction that keeps me connected to what's going on, but not clicking the mouse, or at least not clicking the mouse on my execution platform. And the reason you'll see me enter on the retest quite a bit is because I'm always using limit orders on the NASDAQ. So I'll miss the breakout because there's no way I would have a limit order right there until after that happened. But yeah, I really, really rely. Thank God for meeting Crash back in December. He kind of pointed me in the right direction with the subchart. And this trade today actually, or this trade on this Mardi Gras trade, actually was the setup I used for the little scalp that I took today. I'm still really green with reading the heat map and finding the liquidity unless it's super loud. So yeah, and
it's
then
going to be harder on NQ because of how much NQ can move. Its ATR
right.
for points is very much more drastic than say ES, just the size and scale. So that's going to be a little different. What I have seen is people use Qs to help trade some of the NQ futures at times. So maybe looking at adding that chart, and you can flip back between the two to see.
Yeah, I've got the Qs up on another screen. I've got plenty of resources on that front. But as far as the order flow goes,
yeah,
I'll often drag my chart to where the price action's right in the middle, so I can have more space on the right. So I really like to watch how the heat map acts on the right, where price, in the future, if you will. So I'm looking at that almost like I would look at the DOM, which I really use a lot to manage my trades and to find my entries and that kind of stuff as well. But no, I think you said everything that I could have said there. I define things a little differently, I believe, than is standard for the forum. Over the years, I've developed kind of my own definitions for exhaustion and failure.
It's the same thing. Yeah, I mean, we all generally have a good idea of what people are saying for the most part. So I'm pretty sure we don't get hung up on those too much. Also, everybody we've met with it, including yourself, has been very forward with, this is what I was looking at. Maybe I use a different name kind of stuff. So it's always kind of getting that community going, which is really the biggest importance for the Academy in general, is just try to keep that community kind of growing and building and making sure these meetings are helping people. So don't worry too much about terminology.
Yeah, very, very cool. I would also throw in that I don't normally get this many points out of a trade. I'm always targeting about 12 to 15 points. But when they don't even pull back, like, you can't not get this many points. It didn't even give me a chance to move my stop. And I wish every trade looked like this. But it sure seems to have been. It could be because we're bouncing around all-time highs and all that crap, but I've seen so much rotation lately, and that's really, really hard for me. I have the staying power to take one or two pushes, and then I'm out.
No, I mean, this is great. This is kind of similar to the other trade when London ended. You got that monster rip, but it hit your target, so you were good. Whereas the other trade, it didn't necessarily hit a specific target because I don't remember seeing a specific target.
Right.
But this could have pulled back a little bit, and you might not even had a swing low necessarily. It could have just completely reversed on you. But
right. And I would say price action world, the 5 minutes where it based out looks so much different than any other part on the chart.
Yeah.
Which I was actually looking at this at I don't know, 11:25, thinking, well, I missed a short. I'll just have to wait forever. I missed my trade. I'm kind of complaining. And then you get 5 minutes of this super tight range, and it's go time. So
Also to mention, for those not recognizing, this is a 1 minute chart, timestamps. So this is looking at a lot more infinitesimal structure, a little bit more microstructures, not quite truly microstructures, but you're looking more at the order flow in that shorter time frame. So it does help with that, breakout, retest, entry that you ended up getting. It's really great. If this would have been really condensed, this might have been just a solid ripper and you might not have seen it. So you've adjusted your style to it, and it's great to see.
yeah, thanks. I was hoping for some more red ink, but I'll take it. I appreciate your time, and
No,
I'll
but
keep
you
it
did
brief
great.
today.
Bruce, did you have anything, or David?
No, excellent, excellent. I mean, maybe number three, the failure. I really like the image. You have that in mind, and then you look right at it on the chart, and it looks the same. That's a really helpful thing to do, I think.
Yeah,
Cool.
great chart. The thing you've sort of touched on there is this is a London close trade for me.
Yep, absolutely.
It's you've got that little bit of consolidation, segue in ahead before London closes, and then off it goes. And as I often call out within Spot Gamma CTA, it's a call to action, getting ready for that London rip one way or another. Doesn't always happen, but for me, it's in the mind diary every day. Where's the London trade on the close to have?
Well, not to burst that bubble, but I'm Central Standard, so this was an hour after the London close.
My bad.
But I will say about I love the London close, and the 30 minutes before and the hour after is probably my favorite time to trade.
Definitely. Yeah, I look at that.
I would
Yeah.
still put this in the London close category. I still think
Yes.
this is
Yeah.
based off of London close.
It could have been
Perfect.
a reaction from the sell-off. So that's all I had, Bruce. So
Yeah,
I'll up
great
down
stuff.
and I will let you guys
Okay.
handle that.
Thanks, guys.
Oh, no, thank you. Great stuff. Great content.
Appreciate it.
All right. So let's see here. So that was it, Jack. Just yeah, that's
Yes, sir.
all right.
Yeah, we're just going to cover Donkey and give you opportunity to do Stan. I've already spoke with Caesar, and he's not here right now.
Got you.
so
Right.
It works out either way.
Okay. Let's see. Stan, are you set to go?
Hey, can you hear me?
Hey, there you are.
All right, yeah, amazing. Yeah, I can do it.
Excellent. So let's see. I've got your Notion chart here. Hold on just a minute. Put it up. Okay.
Yeah, so for VAC, I don't see it here. Just let me have it in front of me. Yeah, so I would suggest him to maybe have a bigger picture to have more context about what was happening. We can clearly see like the big drop, and so I think he was looking for hard read. He was looking for good confluences like buying volume. I would maybe, so yeah, it's more clear on the ES as the Nasdaq, like just by the buying volume, like he was highlighting on the right chart. So
on the
yeah,
right chart.
yeah, on the ES we can see like he was highlighting the relative volume on the bottom.
The relative volume.
Yeah,
Got you.
exactly.
Sorry. Yep.
And
Got it.
makes, yeah, clearly for me the difference with the NQ. After I don't know if he was really, if it's a big point from his strategy, but yeah, for me that was looking more relevant on the ES side. I was even maybe suggesting to highlight more bubbles, like the conviction of bias that can be time and sales or whatever he wants, but looking the behavior of the market directly, like the red circle that I put on the NQ. Yeah, exactly. To have more understanding about what happened in there. And on the yes, so we can clearly see the buying volume plus, yeah, the big buyers stepping in after his CVD plus market plus and spike. And one more thing, it would be just good to put hour or circle where you took the trade, where you enter, and yeah, to have a better understanding of where you took profit or and even where your stop is. I don't know if you're there. I didn't see you, and I'm not sure if the caution, the liquidity, was your stop. It would be good to have more information about it.
Yeah,
But,
that's
that's the only thing that I have to say.
okay. Excellent, excellent. Yeah, I agree with everything there, Stan. There's a lot of nice confluences, and you've got a highly correlated market as well, and you're looking at both, and you're seeing basically the same thing. But I really like you looking at the high liquidity in both.
Exactly.
Then you see like what Stan had put in with the volume here. And you had noted that also down here with your market pulse and the volume starting to kind of shift and change. So you've got many things in here telling you about a potential move. But yeah, it's those things are in there. I totally agree with Stan about entry, where, exit, where. So I would suggest, and I really highly suggest to all the Academy members to try to trade with Bookmap and use those tools. Even if let's suppose you execute in maybe another platform, it's fine. You can still do it in Sim in Bookmap. And it just gives us, some areas of like, okay, this is where you're getting in and how you're managing it and where you're getting out, how you're moving your stops or take profits, etc. And that's a whole nother side to the coaching here that can be really, really helpful.
Yeah, yeah, but agree. And even like maybe have more checklists and more consistent checklists as we spoke with coaches
Yeah,
to
that
have
that
better understanding.
absolutely, Stan. That's a I want to talk about that in a little bit here.
Yeah,
Um,
amazing.
I don't know if so. The mic is open for Vac, but I don't know if he's here. If not, we can go on to another one.
Yeah, so the next one is Shark Blue. Uh, so yeah, first I took the one that he used for, I think it was context. I don't know if you're there, Shark. I'm not
He's
sure.
here.
Ah, yeah, perfect. If this picture was just about context and to know like the point, the level that he was looking for to potentially enter on his 1, 2, 3 setup.
Can you hear me?
Yes.
Yeah,
I am here.
yeah, great. So I was just wondering if the slides was more to have a context.
Yeah, that slide just shows the where that resistance is right where my my trigger for that reversal setup. So yes, for context.
Yeah, but I find it very great. It's just like I was wondering if you made your kind of morning meeting, then you are a lot of doing.
I
Um,
always watch those pre-market pivots, typically on a 15-minute chart, but they're so reactive after the open to those pivot levels in pre-market.
Yeah, agree. So this one was just for the context. You can maybe go to the next slide. So overall, you quite highlight all important points and I feel important. I would just say maybe for the exhaustion, I don't find all the exhaustion. Um, I think for a jack is more when you have no one at the end of a queue. But we can clearly see like on the left side, just after transacting in liquidity, so we had this exhaustion and then another move back and you put a red circle on the left. Yeah, the one on just above it.
This one here.
Yeah, exactly. I'm not sure I would call it exhaustion. I think
Okay, so Stan, honestly, I have a bit of confusion delineating between exhaustion and absorption. And Bruce kind of broke it down for me one day, but I still get a little confused there.
The
yeah,
best way to
obviously.
look at exhaustion is the bid-ask spread will widen. Whereas absorption, you're going to get a lot of volume in a very tight bid-ask spread until one side gives up, and then you'll get your reaction from there.
Yeah, and typically absorption will happen in high liquidity and you will have big volume in there. When you will see exhaustion, you will see no interest, no bubbles, no, or Jack told me once like, zero trades on the top of on the footprint, for example. So
That's
you
a
can
good
maybe
example of
use
exhaustion.
it with
Now,
a footprint.
that in that particular action there where we saw it, it could be a little bit of exhaustion. You can see the bid ask widen a little bit. It's really tough to see with how narrow your view is on ES, because with ES, you got to remember that market makers are required to keep bid ask to a specific amount, and it doesn't widen too much outside of those large market moving things, FOMC, where basically the entire order book drops out, that kind of stuff. So you can maybe argue this is a little bit more exhaustion. To me, looking at this though, and Bruce will probably agree, this looks more like a consolidation as opposed to like necessarily a true exhaustion, just because the amount of volume and trading that you end up having at that level over the course of about 5 minutes there. Yeah.
I think I really like what you did, Shark Blue. Like I agree with Stan. Like this might not be exhaustion. In exhaustion, I would actually argue like very strongly that it is very important to be spot on with your terminology. I would suggest going to our glossary because we all want to be talking about the same things. And when you say exhaustion, we all have to know what you mean. Or if you say absorption, we have to know what you mean. And it's really important. And then like you are very clear on the concept. And then now you can use that word and you can communicate with others with the same terminology, and they will understand what you mean as well. So I think it's kind of important. And I think you've got a really good point here about exhaustion here. I mean, look at this. I mean, look at the delta and look at this over here. I mean, like it's telling you something. And then, right in here is like the sellers are coming in. You get one more little pullback here and then they just come right through.
And it's
the way I'm seeing it is when I see that big bubble, like right there where I have those exhaustion arrows, if I were to see a big red bubble without seeing that bid ask line pop through, I would have called it absorption.
No,
but since I see that
you don't necessarily want to do that, because here's the thing. You got to remember that Bookmap's going to aggregate volume. So if there is a lot of volume there, like if it is a substantial print of volume there, which can happen quite often, that bid ask might widen the most it's going to widen depending on your rendering resolution within Bookmap, but that volume dot is going to be bigger. So when you're using the 5-minute time frame, you got to be aware that you're going to get that aggregation in there a little bit, and you need to be kind of a little bit more cognizant of that particular aspect. It's not just the large volume, it's the bid ask spread widening, showing that there's no active market participation in the aggressor format. And that's in the Learning Center. You can actually see that, where we talk about how the order matching happens and how those orders recede back and forth. That's a great way to look at exhaustion. And I think it's one of the first lessons in the Learning Center, Bruce.
Yeah, you might be talking about. Let me just quickly show it. Go to education from bookmap.com, and then this one here, maybe
Market mechanics.
tracks.
where
Yeah,
they're-
like
where they're
this
matching
big
up.
contracts.
That's it right
This
there.
this kind of stuff. Yeah.
That's it right there. So
Okay, I've watched this.
yeah, so think about it in this context. Okay, so think about your trade that we just had in this context right here. If you had, instead of that 12 contracts, let's say you had 300 contracts right there. Everybody's fighting over that level for whatever reason it is. They're just trading that level. That volume dot relative to the rest of the screen is going to be very enlarged, showing you that there's high interest
Understood.
there. But when it subsides, when everybody goes their other ways and the fighters go to their corners, that bid ask might widen 3 ticks, and you're not necessarily going to see it because of the condensing of your vertical price scaling. So you just got
So
to
if I were to take that 5-minute consolidation and spread it out across my whole screen, is that where I would look for the exhaustion?
you can
No.
still see it in the 5-minute. You can
No.
still see it in the 5-minute. That's not it. It's just you need to spread the price itself a little bit at that time.
Okay, the vertical ladder.
Yes, you'll be able to see it better there.
So
But,
one
ahead,
of
Bruce.
one of the things about exhaustion, it has nothing to do with the order book. It has everything to do with the aggressor.
Yeah.
It means that there is no transactions up at that level here. So remember when AJ showed his footprint chart, it there was a 1 up there, and
Yep.
Right, I remember that.
Yeah, that's what it looks like, and this is you're nailing it here. This is exactly what it looks like in Bookmap.
Yeah.
It's the
That's
same
exactly-
same thing.
But there are times where you're going to get that large print there. So just be aware that it's not just the giant red globe or giant green dot. It's not just that. It's the bid ask spread widening that gives you that exhaustion. And the bid might not necessarily, or the ask might not necessarily retreat. Maybe it's the bid that retreats. So it depends on which way you're looking at in specific cases. So that's exhaustion. But Bruce is very
Okay.
right. For that
Okay,
specific
so
thing, we need to definitely be on the
delineating between the two, I will continue to work on.
Yeah, that's great though. I mean, this is still really good. Like you did get exhaustion. The run up isn't necessarily exhaustion. Well, if you look, Bruce, if you go back to the image real quick, just one last thing here. On the left-hand side, you've got that upper band of liquidity that price eventually breaks through, and it's the first arrow of your exhaustion.
Yes.
That is exhaustion. Because what ended up happening is the amount of volume at that specific time frame had to break through. Once it broke through, there was nobody else on the bid and offer right there, right? So you get that bid ask spread widening, and then you get a little bit of a retracement, and then people come back into it. So right there, that is exhaustion to a degree, right? Because you got that big push through that area, and then there was just nobody there on the other end. It's like, oh, are we not trading this level anymore? And then you get that pullback, and then more volume comes in, and we can see that literally in the volume chart at the bottom. So you did fine overall, but we definitely do.
Can you go to the candlestick chart?
Yeah.
But kind of going over what Bruce is saying, for those specific elements, when it comes to those very, very specific terms, we definitely do need to be precise on those.
Okay,
Whether
understood.
you call something a flag pattern or bearish reversal or a risk reversal or any other random names of trade styles, that doesn't necessarily.
I'm looking for this same thing in the first 90 minutes of the regular trading hours. And that particular reversal was a really, really big one for me.
Yeah,
Yeah,
you can see.
you nailed it.
Yeah, you can see up at one, you've got that long wick right there, right? So price tried to transact up there, and then just nobody decided to come down. And in a footprint chart for that candle, it would show you that, you know, 0 or 1, or like it would show you a bid cross at ask, and it would be very off. Um, but yeah, this is great.
I've been playing with the footprint, and I'm messing with all the settings, and still trying to find that spot where I see the orders. But I'm really liking it so far.
Yeah, that's great. And I think what you could maybe take advantage of it too, it's trying to highlight potential trap sellers, trap buyers in this case. Like if you come back to the other side, like you were playing around with the footprint in Bookmap. And it's pretty much the same as you were using CVP or SVP, but we can clearly see like your potential trap bias on your footprint to like the delta.
Yeah,
It could give you maybe more confidence. Yeah, just to say something. But overall, you are always looking for the same setups. I really like your consistency, and you are doing a great job.
Well,
I like
thank
the
you,
way you
Stan.
are.
I'm gonna keep grinding away at this setup.
Yeah, that's
that is
really good.
that is a really good example of the footprint up there, though.
And just I think where you enter, I'm not sure you had this short-term liquidity. I think it's appear a little bit after, but overall that's a good one. Yeah, the second one in the middle,
This one?
just above. So yeah, you can take this one. So he enter at the number 3. And so the number 3, it's when we broke. So you can go in the previous slide. Yeah, so when big sellers came in, I would just just because I like short-term liquidity, have more short-term liquidity when do seller side pushing down.
Yeah,
But overall,
that's a good point. I totally agree with you, Stan, on that. And you always say it in these meetings, but it is such an important part, and it's not to be discounted. I mean, what happens in the market, this kind of stuff in here with that liquidity and then reaction to that liquidity, it's a supply imbalance here, and it will help, you know, conviction in that trade.
exactly.
So look for it. It's an edge.
Yeah, and I think it's why you are coming in Bookmap, because if you're not looking at this liquidity or
Yeah.
at this volume, I don't know why you are already looking at Bookmap.
Yeah.
It's really the strength.
Yeah. Guys, we're over our time, and I think we're going to have to kind of cut it short here. I did want to mention one thing and slow down also. Let me just show you here first off. Alan, there's an image in here that Stan covered as well, and for you, and then that's it there. I also want to go over Slowdown. He's not in today, but he picked up the slack for us many times. So CMJ, Vinny V, Daniel, you guys are covered in here. So I'll put this link into the chat for you. And you know, Slowdown always has some very, very comprehensive and considerate feedback. And you know, he spends a lot of time on it. So please take a look. And then stay fresh here. You just friendly advice to traders. You know, keep that open mind. And he has a Zen quote in here, so that you might want to take a look at that. I just wanted to briefly cover something, and that is with Rob. And I have my feedback as well. I'll put all these links into the chat for you guys in the Bookmap Academy, so you will see them if you were covered in here. Yeah, Caesar, he was not in today as well. So let's see. What was I going to cover here? Okay, so oh yeah, user account. I just it's great to see you in here. I know you're in today. I just am looking for a bit more clarity in these charts. I'm not seeing what you're seeing. And then DNT Matter. I just had some friendly advice in here because your stuff is great, but a few things. There's a lot of work in here, which is great. Don't burn yourself out though. Clarity, it helping you is really what this is about. You need to communicate that, but it helping you, like this one was simpler, I thought. I would also suggest using instead of all this marking up, you do have your numbers in here, 1, 2, 3, what you're looking for, but consider a checklist. And then Rob, warms my heart. Look at this. So we talked about putting a setup checklist together. You're using the tool here, and you're identifying it on the chart, grading it as well. And this, I hope, is helping you. It looks like it is. You're identifying very clearly now these things: potential trap traders, your impulse move, and measured move, and these elements in here, pullback, entry in here. This is beautiful, and I'm hoping that this setups checklist here has helped you get into this mode here. It appears like it, instead of being all over the chart, all over the place. Very clearly identifying these things. You got it. Keep doing this. This is the direction, and then you'll get really good at it. You'll get better at the grading as well. It'll become more objective for you, because it's kind of subjective when you first start. And then identifying on the chart, you'll be just looking for your entries, and you're identifying that. Here's your entry here, and another potential entry in some of these areas. But beautiful stuff, and I really hope this is clarifying things with you. That's all I had, guys. There was one more thing, housekeeping thing. Well, thanks to all the coaches first off, Stan, Jack, Slowdown, David, and thanks guys for all of your chart journaling here. And if we didn't cover you this time, we'll get to you next time. I know I wanted to cover AJ as well as Crash F16. It's been a few weeks and we haven't gotten back to you. We will next time. But anyway, sorry about anyone else who we may have kind of glossed over. So if you guys want access to the VWAP, the anchored VWAP tool, you can get it now. You'll need to sign up, and like I said before at the start of the webinar, you'll need to sign up with the what is it? Let me find this slide. Do I have a slide? I don't have a slide anymore. Okay, but you'll need to sign up and match your Discord and email together, and then you will have access to the room. That's exactly why we came up with this whole plan to begin with, so that you can get access to these things. We know who you are, and we'll gladly give you access to it. So Dan, if you I think you probably put the link in there. Yep. Did you? No. But anyway, yeah, look for it, and have access to it. There you go. There's the room. It's in the beta room, AVWAP, AVWAP, anchored VWAP. Good to go. You guys that signed up, you can download it there. You have to download it and start playing around with it. Note that it is a little buggy. It is beta. Okay. You may, if it kind of screws with your charts a little bit, just remove it or and then add it back again or something like that. They are working on it, but we wanted to release it for you because it's been much requested. That's everything I have for you. Any last words, David, Jack, Stan?
No, I appreciate the time, guys.
Likewise, appreciate the time, and keep the trading up, everyone. Good luck.
Thank you. Have a nice
Thank you.
All right, thanks, guys. Take care. Bye-bye.
Take care. Good night. Take care. Bye bye.